Hello everyone and welcome back to Innovation Markets Forex course lesson number 2. Today's course lesson is going to be about trend lines, and we're going to look into all the different details about what a trend line is, how you find a trend line, and most importantly how you can take trades from a trend line. So they're going to go into great detail, but first I'm going to just recap on the end of lesson 1 so we can have a smooth transition from lesson 1 into lesson 2. Now in front of me what you can see is the exact same chart that we finished off with on lesson 1. It's actually been 5 days since we recorded lesson 1 because we wanted to see how the market played out so that we could then basically show you what we explained in the first lesson, how it works and how it plays out in real time. So we put our first lesson out on YouTube, and a week later now we're recording lesson 2, and we're going to show you exactly the power of what we showed you in lesson 1 and how well it works. Now what you can see in front of me here is this GBP USD chart on a daily time frame. We've got the top down analysis, support and resistance levels from the monthly, weekly and daily. Now remember, everything on the monthly, weekly and daily is very, very strong, and that goes for everything. That's very important to write down and to know off by heart that the higher the time frame, the stronger. So weekly is stronger than daily, monthly is more stronger than weekly, and as you go down the time frames, as you can see here at the top left, daily is strong, 4 hours weaker, 2 hours weaker again, 1 hour is weaker again, and so on and so on. So we have our support and resistance levels lined up here that we got from our top-down analysis from the monthly, weekly and daily time frames. So we know that they are very, very strong. So having given you that and explained how to get top-down analysis in lesson 1, at the end of lesson 1 we explained how price had broken above resistance, retested as support, and how this was the buy opportunity in order to look at for this market to move up higher. We explained what we could expect price to do. Now it had broken through resistance, held as support, and was looking to move trying to move up higher. Let's just go to the 4 hour quickly and just study that on the lower time frame. So just quickly guys, as a quick refresher, I'm just going to draw these two lines on. Remember what we explained in lesson number 1? When price breaks through resistance, what do we expect it to do? Come back down and test as support, because the resistance here, once it's broken, turns into support. And then what we expect if support holds is for price to push up higher. Now, in real life terms, since the last video that we've done, as you said, we explained, especially here on the daily, price had broken above this resistance at 1.3250, as you can see here over on the right hand side. Price broke through that resistance, strong close above on the daily here, and in the next daily candle tried to come back down lower but retested the support but closed above. So this is where I explained that we would be looking at price to hold as support and then push up higher. But as price had held as support on a daily level, of support, that we could expect price to do what? To go in search of the next daily level, which is here, 1.3375. So we explained that price, now that it's broken above a daily level of resistance, retested it as support, price is now going to try and push on and find the next level of resistance. Now, we did also show that there was a 4 hour level of resistance, if you remember. If you haven't watched lesson 1, I highly recommend you watch it. And so you can see the power of how using resistance and support effectively can really just completely change your trading. So many people have been trading for a long time, but really don't use support and resistance properly. And if you're learning from beginning, this is perfect for you. So here, we knew that this daily level of resistance had been closed above. We've retested it as support. We explained that we had this weaker level of resistance because it was the 4 hour time frame was just above us, and that we could easily expect price to come up and test this, but it was more than likely going to come up and hit the daily resistance Why? Because we had broken through the daily resistance here, and the daily was holding as support. So therefore we're expecting price to push on. Now I'm going to replay out what happened since the last video and since lesson 1. So straight away we came up as soon as the market opened and we hit the resistance and we broke through the level of resistance. So bearing in mind, in the lesson 1, none of this price action had happened. This is real price action in between lesson 1 and lesson 2. Price had broken above resistance here. What's the first thing that's happened on the next candle? We've retested as support. Let's see what happens next. Next candle, we've retested as support, confirming that it's holding. So if it tests once, tests twice, tests 3 times, confirms that the level is holding, and there's a stronger possibility of it rejecting and pushing up higher. And then we can see here, we've rejected here, and we've pushed up, and we've hit this level of resistance. Where did this level of resistance come from? This level came from, you can see this price has actually rejected it quite sharply. This came from our top-down analysis. Now we just go to the higher time frames and take away our top-down analysis. You can see how you wouldn't know that there was a level of resistance there. Many people would have taken a level of resistance at the top. Most retail traders would have taken a level of resistance at the top here. Expected price to come up here potentially, but it hasn't. Price has actually rejected a price much lower down, and that is because we have our daily, we have our top-down analysis for monthly, weekly, and daily. So we knew that when price got to this level that we want to take profit. As you can see here, we come up, we've hit a level of resistance, we bought at support, and we've hit resistance, so we want to get out. Now, why would we want to get out? Because it's resistance, guys. And many of you, even if you're new to trading, would have probably heard the term buy low, sell high. In a bull market, that's exactly what you want to do. In a bull market means a trading market that is going higher, pushing up higher, as we can see the price is doing now. Why is that? Because support, as explained in lesson 1, is a form of, it's like the ground, it's the bottom. It's a level of support. It's at the very bottom. It's a floor where price can't break below. It's like the ground floor. Price can't break below. It's made a floor, and now it's only going to move up higher. Price has made a low here. It's hit a floor, and now so that's where you want to buy, at the bottom. So then price is pushing up, and then it's starting to hit levels of resistance. So here it's like like I said in lesson 1, it's hitting a level. It's like hitting a ceiling. It's hitting resistance. So it's banging its head on the ceiling, banging its head on the ceiling again. Let's look at the next candle, and you can then see it's banged its head on the ceiling a 3rd time, and it's pushed down because price has found resistance. So you're buying from the bottom at support, and you're selling at resistance. So you're buying low, and you're selling high. So you're buying here, and you're getting out of the market at this level, and you're making the profit in between. So, but what you can also see here on the lower time frames is to confirm our beliefs of what's happening. Is price is broken above resistance, retested as support, and then pushed on to that daily level of resistance that we expected price to go to. Then the rest of the week, price sort of just continued to fluctuate. I think like in lesson 1, I showed you how price can consolidate sometimes, but that's something for the future. So that brings us quite nicely from lesson 1 into lesson 2, and it shows how perfectly price action plays out to support and resistance, and how you can make profits from the market from our lesson 1 alone, by understanding top-down analysis and by understanding support and resistance properly. As I said, many people, when price got to here, many traders would have not understood why price just stopped here for no reason. But you can see here, by using the levels that we've explained and how to find them with top-down analysis, that on the daily time frame, which is the higher time frame, which is the stronger time frame, daily has found resistance here once, twice, 3 times, 4 times, 5 times. We've called out a precise level of resistance here by using our top-down analysis. So we knew that price is going to find resistance here. Instead of holding a trade that we might have bought here and price moved up, and now price is coming back down to where you bought it, and you might not make any money in the market, you can take profit here And then because we know that there's a level of resistance here, a strong level of resistance, because it's marked out white, because it's a daily resistance, and we got it from our top-down analysis, we can actually sell here. You can sell high and buy it back low, because you'll sell at the top and buy it back at the bottom and make the money in between. So that shows you exactly, guys, how support and resistance works. And I said that was a live chart. We're using the exact same chart as lesson 1. And with that, I'm going to use the exact same chart for lesson 2. Because thank you for the comments, guys, on lesson 1 on the channel. Please comment if you have any questions. Please let us know what you think, and like our videos. But just as on the first video, we had lots of questions about, can this top-down analysis be used on different instruments like trading commodities like gold and oil, which it can be. Can it be used on the stock market like US 30? Yes, it can be, and it can be used on all types of. It can be used on all currency pairs, majors and exotics. It can be used on everything. So you can use this and go away and practice it and get the levels and see how well it works out, which you can see here from our charts works very, very well. So now we're going to get into trend lines, which is one of the most important things in trading and understanding how to use them. So you know, from lesson 1, I've got my daily chart here. I'm going to split into one of these other screens here so I can have a clean chart. Just drop down here. I'm going to go to a clean chart, and I'm just going to start off with some annotation first, guys. So I want to explain what trend lines are. So everyone, again, if you're new to trading, this is perfect for you. We're building those foundations, and we're going to give you all the information you need and get rid of all the things that you don't need. If you have been trading for quite some time, we've had great feedback on our lesson 1, how even though many people have been trading for a long time, just seeing how to simplify support and resistance has really helped a lot of people. So we're going to really simplify this and build up slowly and until we get to the more advanced stuff with trend lines and the rest of trading. So what trend lines are? Trend lines, to begin with, is a line drawn on once we find 2 points in the market. I'm going to show you what that means in a second. I'm going to show you what that means now. So 2 points in the market. There has to be 2 points in the market before we can find a trend line. Now, what do I mean by points? Now, when we see price moving, we see it moving like this. Moves up higher, moves down, moves up higher. This is in a bull trend, in a market that is moving up, bullish. Lots of terms that we'll get to in the future. Moving back down, moving back up. Now, at this point, we can draw a trend line on because of 2 points in the market. Once there's 2 points in the market, we can draw on a trend line. So we can go here, get the trend line tool, and draw on a trend line. So we've got 1 point here. We're not going to include this because this is just to start the trend off. This could have come from a lot lower. But here we've got 2 points here. We've got 1 point here. And where's the second point? We've got a point here. Once you get 2 points, you can draw on a trend line. This is a trend line. In an ascending market or a descending. This is an ascending in a bullish market pushing up. A trend line is the meeting between 2 points in the market. You've got point 1 here. And we've got point 2 here. Once you find those 2 points in the market, you can draw on a trend line. Now, why do we want a trend line? Because a trend line is what many people fail to remember, even who have been trading, because they get overloaded with too many things. They forget the very simple fact of what a trend line is. A trend line is a form of support and resistance. That's what a trend line is. And that is why trend line is lesson number 2. Lesson number 1 was support and resistance. We're not done with it yet. And a lot of people don't refer to trend lines as support and resistance. They talk it as a trend line, but they were just sometimes forgetting that it is a form of support and resistance. Now, why do I say that? Because what we can, once 2 points are drawn on a chart, once there is two, or not drawn on, sorry, once there's 2 points in the market, we can draw on a level, we can draw on a trend line. Now, a trend line is a line of support and resistance. So basically, once you find point 1 and point 2, once a second point has been made, you can draw on a line of support. So just like in lesson 1, if price is going to reach support, what are we expecting it to do? Price comes back down. What do we expect from here? Price is meeting a level of support, so expecting it to reject that level of support and push up higher. And then we have the golden third touch of the trend line. So the reason I called it golden, I'm going to get to that in a minute. So here we can see that trend line is actually a level of support. That's what a trend line is. And it needs to be used just like a trend, just like a normal support and resistance is used. So here it's being used as a level of support in an uptrending market. We've got point 1, point 2, and point 3. The third touch is always the most important touch of a trend line. That is where we can anticipate buying the market, or whether it breaks and then it potentially pushes down. But if you're looking at buying in the market and looking to take a long trade, the third touch is the golden touch in the market, because at point number 2 there is no trend, because you have to have 2 points in order to make a trend. But with the third touch, if we can confirm support here, this confirms that there's a trend, and we're now making a high, making a low, making a new high above this high here, which means that we are progressing higher. Even though we're making a pull back, this push up is above the prior high, so it means that we are progressing higher. So even though we are pulling back here, it means we can progress up above this high and keep pushing up higher. So even though we have these pullbacks, that we are moving up higher, slowly but surely. So the third touch of the trend line is always the golden touch. That's where we want to be looking at buying if you're looking at buying in an uptrend. So what trend lines are? We know that a trend line is a line drawn between 2 points of the market, point 1, point 2. That's basically what a trend line is in a nutshell. Then what exactly is that trend line? The trend line is a level of support and resistance. So once you found it, well, you have to understand what is it acting, what is it doing on your chart? Why are you even drawing it on in the first place? Because you're expecting it to be a level of support or resistance. So here we've got a level of support. I don't want to delete that, so I'm going to have to delete this individually and just show you visually, guys, because once you see it visually, it's so much easier to understand and learn. Let me just draw this on. So now this is a downtrending market, or a descending. So price comes down, comes back up. Now price moves back up. What can we do, guys? We can now draw on a trend line. Where did we draw it from? We need 2 points. We've got 1 point here. We've got 1 point here. Draw that on, and what that does is it extends into the future a trend line or a resistance line. So we saw the support in the uptrending market. Now price is below this level. So if price is below that level, what is it going to be? It's going to be a resistance. So you can see here, come back. This made a second point. So now we've been able to draw on a trend line, which is basically a resistance line. So we've got our 2 points, which is point 1, point 2. So now we've formed a line of resistance. So what can we expect when price comes back? Well, we know that this is a very important area where price is highly likely to find some resistance and push back down even lower. And this is where we can be looking to sell the market, just like on the third touch of the uptrend, we'd be looking at taking a buy in the market. Understand what a trend line is, with it being a form of support and resistance, and also where we want to be looking at potentially getting in and out of the market. What we also need to understand is what happens if it doesn't hold as a level of resistance or support. Now, just like a support and resistance level shown in lesson 1, we have to understand that if price breaks through here as resistance, what can we expect price to do if it breaks resistance? Sorry, let me put that back. Actually, yeah. What do we do if price breaks through resistance, as explained in lesson number 1? Remember, we're talking about normal resistance. So price break through resistance, what do we expect? To come back and retest as support. And if support holds, and only if support holds, then we can expect price to push back up higher. So what do we expect if price breaks through resistance or through a trend line? Because a trend line is a resistance. So what can we expect price to do? Come back and test as support. And that is what happens in the market. So this is where we're going to go on to shortly about how to trade a trend line. But just while we're talking about support and resistance, we'll touch on it here. So if we've got point 1, point 2, creates a trend line, ascends a line of resistance into the future, as you can see here. If price comes back and does manage to break through this resistance, what do we expect price to do? Come back and test as support. If price comes back and tests as support, what can we expect? Price to reject and then push up higher. And then next thing, what you can see is price starting to potentially move up higher, because we've broken through this trend line, we've broken through this resistance. If we break through and come back and test the support, what we can potentially see is a new trend line. It's a little bit sloppy, but you can see what you can potentially see is a new trend line drawing on. Why? Because we've got point 1 here. We've got point 2 here. So then what would we expect when price comes back? That golden opportunity of a potential point 3, where we'd be looking at buying the market and pushing up higher. But for argument's sake, because I'm talking about support and resistance and how important trend lines are, and that they are support and resistance, let's just say if price did break through here. Now, if this third touch didn't become a buy opportunity and price actually broke through, price has broken I'm just going to make this a little bit neater. Price has broken through what here? So again, we saw point 1, so price broke through this trend line, came back, tested as support. That was point 1, pushed up. This won't always happen, but this is just a nice example. Price pushed up, pushed back down, point 2. So we've got 2 points here. What does it mean? It means we can get our trend line tool, draw a line through the 2 points, and it then ascends a line into the future, where we can expect price to come back at some point. Might not be here. Price can even do this, guys. Price can then push up higher, and it might not come back down till this point. It doesn't mean it's going to come back down straight away, but price magnetizes, like I said earlier, price magnetizes to these trend lines. So it's drawn to come back to these trend lines. So when we get too far away, you'll often find price comes back to these trend lines, and it does tap them. Trend lines are such a useful tool to understand. And again, if you keep them really simple, just like support and resistance, as I showed you at the start of this video, you can make a lot of money just by trading trend lines and support and resistance alone. But for instance, if price comes back for this third touch and actually breaks through and breaks lower and actually invalidates this trend because it's broken a last lower low, but we'll come back to that in the future. Price breaks through this trend line. If it's broken through the trend line, what is it actually broken through? It's broken through support. So then price is going to do what? It's going to come back and test that as resistance. And when it comes back and tests that as resistance, that's when we want to be looking at selling the market, because price is doing what? It's retesting resistance, and then it's going to sell off. So if you can try and get into your mind that these trend lines are exactly the same as support and resistance. So you want to sell at resistance, you want to buy at support. If it breaks through resistance, comes back down, tested support, you want to buy. So if you can understand that trend lines really are just another form of support and resistance, you can understand to buy and sell from them, and you can make a lot of money in the market from buying and selling at resistance. But it's not that easy. If it was, everybody would be doing it. But we're now going to delve in even deeper and explain to you how to start trading them. But a little bit more first, we're going to move to the real chart and start showing you how to find them with real price action. At our resistance and support again, as in lesson 1, we want to be doing top-down analysis, starting from the higher time frames, looking at our way down. Because why? We know that the higher time frame support and resistance is going to be the strongest, so therefore we need to know where it is. Same goes with the trend lines. We understand that the higher the time frame, the stronger the trend line is going to be. So we then therefore need to understand where those trend lines are going to be. The higher the time frame, the stronger the trend line. So I very rarely use monthly for trend lines. You can use them just to see, but they don't come into play as much. So firstly, the only time we want to be looking at a monthly trend line or trying to find a monthly trend line is if we've seen a weekly trend line broke. But I said monthly is very, very rare. So I tend to start on the weekly chart when we're looking for trend lines. Now, why do I start on a weekly chart? So like I said, the higher the time frame is always the stronger. So if you find a trend line on a weekly chart and you see that price is coming close to it, that is going to be very, very strong. Just like support and resistance in lesson 1, is going to be the strongest level of support and resistance. If you find trend lines on the daily chart, then it's going to be strong, but not quite as strong as the weekly. Then if you drop down to the 4-hour, again, yes, it's strong, but it's not as strong as the daily. It's getting weaker, so there's more chance of the 4-hour breaking. Same as the 1 hour, it gets weaker, 30-minute, 15-minute time frames and so on. We don't really touch these time frames until we're looking for entries. That's what we're going to get to in the future. But again, we want to start off with trend lines on the higher time frame because we want to understand, are we going to run into resistance? Are we going to run into support? Just like I explained over here with this at the start of the video, is if you didn't have these levels of support and resistance on, let's just clear the chart for a minute. You could have been in this market taking a buy trade anywhere here, or even if you've been in a trade and then you don't realize that the market's turning because you don't understand that there's a level of resistance in the market. That you don't understand that there's a daily or weekly level of resistance. But by using what we're showing you, you understand that there's a daily level of resistance. Now, if you don't know that there's a daily level of resistance on a trend line or a daily level of support or weekly, whatever it may be, if you don't have that trend line drawn on, you don't know that price is effectively about to hit support or resistance, because what is a trend line? It's a level of support and it's a level of resistance. So therefore, you have to know where these trend lines are and where they're going to come into play, because they can affect your trade if you're in a trade. But then what we basically more importantly want to know is where they are so that we can get into a trade. So let's just take this level, this area, for example. When you're looking at charts, you can go way back. There's so much price action in the past. For here, I'm going to go over this in a minute. I can actually start from here. By rights we should actually, and this is a significant high, but we're going to come back to that in a minute. Sometimes with looking for trend lines, you can go way too far back in the past and you're actually forgetting what's happening most recently. Now note this down. Obviously though, the history further back is quite important. We can see that back here, this is the weekly chart. This is 2018. We can see at the bottom of the chart. So therefore, this is still important time. It's the most recent price action on the weekly chart that we want to be looking at. We don't want to be going back to 2002 or 2000s or 1990 and so on. That's too far back. What's happening right now is more important, and why is that? Because we can see prices reacting, or price, if we can see here September 20, go over here, we can see 9th of December 19. We can see that all of these times is where price has been reacting off these levels. So we want to be dealing with what's in front of us and what we can see that price has been reacting to most recently, before we start looking at what price has been reacting to 10 years ago. So that should make quite clear sense. So then we want to be looking at trend lines in the same sense. We don't want to start zooming right out on our charts thinking, right, well, there was a high back here in 2014. This might come into play. Yes, at times it will, but don't get yourself too clogged up with that and don't overload your charts. That doesn't matter too much. What matters more, especially on a weekly chart, that's way too far back. You want to be looking at the most recent time and the most recent candlesticks or price action in order to be able to analyze, because that's going to come into play first. If the market's been reacting off levels most recently, then when price gets back to that level again, it's more than likely going to react, not to a level of 10, 15 years ago. So what we want to be looking at here is finding levels on the weekly time frame. So as I said earlier, I just touched on it, I like to call trend lines direction lines because they just visually give you a sense of where the market's going. So here I can say, right, if I'm a brand new trader, I'm going to say, okay, I've just learned that if I put a trend, if I find 2 points on the market, I can understand where price might go. So here is a point, and here is a point. So if I draw a line on, okay, but there's no point because I can see that price has been here, done that. We don't want to be looking at that. We want to be looking at where there's 2 points in the market, and then we can ascend price into the future and see where it may go. Now we're actually at a unique point, probably not the best for teaching. I might have to go to another chart. We are actually at a unique point with this chart, GBP USD, because we have a significant high here, we have a significant high here, significant high here. But these are weekly, so we can take a point from here, point 1 and point 2. Point 2 being here. So we have our 2 points and we extend this chart or this trend line into the future. We can now see that this is point 1 and this is point 2. So what do we expect to happen? And this is actually really good for educational purposes. What do we expect to happen at the golden third touch? We expect to find what? Price is trading below, so we're expecting price to find resistance. What has price done? Price has come back up, hit this trend line to the T. You can see it spiked it. We've had a huge reaction. We've had a touch here on the trend line. We've had a big reaction on the weekly chart. So this weekly candle, we saw a big push up, as I explained at the start of the video, and then we saw a push back down. Price is rejecting our resistance line, our level of resistance here, but it's also rejecting the trend line resistance. So it's actually hitting two levels of resistance. But here, again, we actually just forget the support resistance for a second, and we just understand and just look at what we've got in front of us. We know that point 1, point 2 create a trend line. And what is a trend line? A point of resistance. Point 1, point 2. So what happens at point 3? We find resistance. So what could we have done here? We could have sold. We drop down to the daily. So we could have sold here at that resistance level, and we could look at price moving down, and we can just quite clearly see that price has moved up towards this resistance level. Let me just move this out of the way. Price has moved up to this resistance level and pushed, and then started rejecting because it's touched that third line of the trend line. But see how precise is hit this? That was point 2, point 3, touched precisely, and then moves away. Which brings me to one more point, guys. Very, very important. I remember when I first started out, I wasn't sure. I used to try and find out what exactly the way to use a trend line. Many of you probably have the same question. I used to always wonder when I was in my early days, first 6 months, this is back 10, 12 years ago, how do you draw on a trend line? Because there's so many different ways that I've seen. So many traders use it different ways. But I hope that this will actually show you why to use it the way I say to use it. Because I say to always use a trend when you have point 1, point 2, like this point here. Many traders don't include the wick. The wick is the white line here. It's where you can see price pushed up and price pushed back down. We're going to get into candlesticks in the future, but you can see this is the wick and this is the body. Many traders don't involve the wick and use the body and trade like this. But with this here, you can see that would have looked like price has broken out and pushed up, and at the top of this wick here, you would have never have known that there could have been a level of resistance. Whereas when you're drawing on your trend line, always take the very end of the wick, and for the first point and also the second point here. So you have the second point, and then you can extend to make sure that the trend line is touching that. Then you can see the third line has actually come up and tapped that absolutely perfectly and then rejected. Use the wicks, guys. Go from wick to wick, and you'll see that price will always magnetize and work towards those levels. So price has come back here on a weekly and hit this resistance. Now, as I said, on the higher time frame, support, resistance, candlesticks, everything is stronger on the higher time frames. So it is not surprising that price has come back up for a third touch here of the trend line and rejected, because this is a weekly trend line. Now, when drawing on your trend lines, just like the support and resistance over here on the left hand side, you can see the monthly levels are in bold or a thicker resistance and support, and the daily levels are dotted because they're slightly weaker, but the weekly level is just a slightly thinner, thick line. When doing the trend lines on the weekly, you can make them thicker. So visually, you know, as soon as you look at it, you know that is a weekly trend line. When you're looking through different time frames, you could easily forget, or you can even make it a different color if you wanted the weekly to be bold and let's just say red, so that you know it's a weekly. Entirely up to you. You can use the trend lines and customize them as you want. So here we're at a unique stage here where for GBP USD, we are coming to a place where it's going to be very, very important in the week ahead, where price is either going to reject this completely and break back down, and we're going to continue what can be classed as a downtrend. Now, GBP has been doing a lot over the last couple of year or so, but we're not going to go into that on the trend line on lesson 2. But here we can quite see that a trend line is causing a level of resistance, and we're finding some resistance here. Now, when we are also trying to find support and resistance with the trend lines, I'm going to go that down to the daily time frame here, because we don't need to be on a weekly too much. We need to understand that there is 3 types of trend lines. And having these drawn on your chart can really, really help you and understanding, because when you break trend lines, I'll get to that in a minute. So the three types of trend lines, and I always found that as trading, having these on my charts helped me massively, because they just visually show you what price can do. So here, let's see if we can get an example here. But there's three types of trend lines. There's a long-term trend line, there's the outer trend line, and there's the inner. So again, here I'm on the daily chart. I don't need to go too far back. On a weekly here, I can see that we've made a significant low here, and price has been moving up. So I don't want to have too many trend lines on my chart. I understand that this is the weekly. You want to sort of focus on most recent price action. Again, don't get too caught up with what's been happening too far in, previously. Let's have a look here. We can see here at the bottom of the screen, this is March 2019. So we've got a good sort of 8 months, 9 months here of price action to understand. So let's try and understand this before we start trying to understand everything that's too far back. So we've got a significant low here. So let's draw on a trend line. Point 1 and point 2. Point 2 here. Now previously, before all of this price action here, you could have actually put it on, let's just say, point 2 here. Price came down, didn't quite break it. This is going to get into a bit more complicated stuff we're going to get to normally, so I'm just going to keep as well what I'm trying to say here, guys. So here we've got point 1 and we've got point 2. Again, like what I was just about to say, is you can say before this price action here, this was point 2. Let's just imagine that's point 1. That's point 2. And then when price came back down to the golden touch, point 3, there was your buy. And then there was a nice move up from there, and then moves up to 500 pips, which is a crazy amount of pips. But this here on a daily time frame is what we would call long term. This isn't a great example. I'm going to have to go to another chart. Just unfortunate that price action on this chart isn't going to give us the education we need. So here is point 2, because we made this low. So once we tried to break this trend line support, couldn't break support. You can see here wicks. So then once it pushed back up, what we need to do is adjust the trend line. Why? Because we're working to the wicks, guys, like I just said. So here price has tried to invalidate it, but we have come below the trend line support. But now that it's pushed up higher, we want to come out here. We want to come out to this wick. So this has now become number 2. This has become point number 2. But this is the long-term trend on the daily chart. You can see here we've got point 1, point 2. Then we want to now drop down to the 4 hour to try and understand where, sorry guys, where the outer trend line is. But as I said, unfortunately, I don't think we're going to get all 3 trend lines here. So I may have to go to another chart. Here is the outer trend line. This shows that there can be trend lines within trend lines. So we've got the long term, which is on the daily time frame or the weekly. As you can see here, we've got point 1, we've got point 2. But then once we've got that, we can see price ascending inside a trend line. So then we want to drop down to a lower time frame and see what price is doing, and see if we can find another 2 significant points to draw a line between, which is a trend line, which is a line of support resistance. We've got point 1 here, we've got point 2 here, and then you can see price came up, came back down, didn't quite meet the trend line for that golden third touch. So this being point 1, this being point 2, didn't quite make it here, but you can see here point 3, the golden third touch. As simple as that. Drawing a trend line on point 1, point 2, you could have taken a buy trade here and then seen a move up. And even from here, from that trend line alone, was 180 pips. So unfortunately here, I can't give you the inner trend line, but I can give you, there's nothing here to show it, just the way that this chart's playing out, guys. Let me go to a gold chart here. Let me just see. this might give me the three options that I want. Just to show you that there's three trend lines that you want to be putting on at all times. So here we've got what I would call the long term, because it's the long term moves. You can see we've got the significant low here, which on gold at the moment, if I just zoom out on gold, you can see here we've got a low here at 1046. We've got a very long-term low, long-term trend here. Then we've got the outer, which is from this significant low to the next significant low, which is here. And then we've got this significant low to this significant low. To be honest, guys, this is way too low. This one, again, is too far away. So I'm going to class this one because this is just, if you know gold is just way too low here. And we're just too far away from where price action currently is. But here would be, so this would be the outer. If you can put 3 on, 3 is all you need. So you want to have a look. This is the long term. This is the long term trend. This is the outer trend line. And then now we want to look for the next trend. Where's the next 2 points? Here. And this would have been here. And that was the inner trend line. So we can see this is a good example here, guys. There's 3 trend lines here. We've got the long term, we've got the outer, and we've got the inner. Quite simply, this is called the inner trend line because it's so far in, it's following price action as it's moving. Price usually reacts to this quite sharply, but the inner trend line is the weakest because with trend lines, the steeper the trend line, so imagine this is a vertical, this is steep, so the steeper it is, the weaker it is. The less steep it is, the stronger a trend line is. So if a trend line is like this, similar to this outer trend line down here, it's going to be strong. If a trend line is like this, and you see price, this is very important, guys. This is why I'm going through the effort of actually drawing this out right now. If we see price like this, which you often see on the 1 hour chart, 4 hour chart, this is weak. This could break at any time. But what I'm about to show you now is what happens when that breaks. It doesn't necessarily mean that the trend is broken. It just means that the inner trend line is broken. And a lot of people get this wrong. When they see a break of this trend line here, even if price comes back, it hits this as resistance, as it should, and then moves down. It doesn't mean that the trend is broken yet, because we may just be moving towards the outer trend line or the long-term trend line, which I'm going to show you now. We've got a very good example here. So when price breaks out of a inner trend line, for instance, visually here, we can see this on gold. We've got 0.1, 0.2. Price came up, broke through here. When price breaks through the inner trend line, its next destination is the outer trend line. And if we get to the outer trend line and break that, the next destination is the long-term trend line. In this case, the long term isn't too far away from the outer trend line, but in other cases, we may see that you may have an inner trend line here, you may have outer trend line here, and the long term could be down here. But as I said, this works vice versa. If price is above and we break the inner trend line, what we can expect is price to pull back, and then we're going to be looking at price going to the outer trend line. And if that was to break, then what we expect is price to come back, retest the resistance of the outer trend line and come out to the long-term trend line. Now, can you figure out why that would happen? I'm going to bring you back to lesson 1 quickly with resistance and support. Or even like, I'll just bring you back quickly to GBP USD here. I'm going to quickly bring you back to the daily resistance. Remember the lesson 1 where we said we broke resistance and we came back in support. Once we break support or resistance on a daily time frame, and retest as support on a daily time frame, what are we going to look for? We're going to look for resistance on a daily time frame, which we came up to do. Now we go back to our other chart, which is here. Go back to our other chart. If we break a support, here, what we're going to do is then go in search for the next level of support. So we're going to be aiming for the next support, which is the next trend line support. So remember, these are all levels of support. So if this, you can see here, we've got support, support, support here, but we've broken through. Once support is broken, price is searching for the next level of support. So therefore, it's now aiming for this level of support. So we're going to see price trying to come down and potentially aim towards this outer trend line. So this inner trend line is now invalidated. This no longer matters. Price is going to come down and try and push out to these areas down here. So this just gives visually on a weekly time frame. This happens on lower time frames, but this visually gives you an idea of the three trend lines: the long term, the outer, and the inner. So once the inner is broken, price is searching for the outer, and once the outer is broken, price is searching for the long term. Let's go down to the daily here. This is more of what's been happening with this pair for since March or since August. So we can see here we could have had this is where market structure is going to be very important, which I'm going to be teaching you in one of the next few lessons, where prices come down, made a second point here on gold. You can see point 2, prices come back up. We're having a third touch here, but you can see here how price really is sort of broken resistance, but hasn't been able to break this area of resistance here. This is where shortly we're going to be combining resistance and support with trend lines. That's why we're merging the two together soon. You can see here we've made support. We come up, we've made resistance here on the trend line. We come back down. Then here we've got this trend line resistance, but this resistance here we haven't been able to break above it. So therefore this trend continues down lower. Same thing has happened here again. Price hasn't been able to break this area of resistance. Price has tried to break the trend line, has been unable to break the trend line, has pushed back down, found prior support. But then what do we do when price tries to break a trend line but doesn't manage to? We go wick to wick. So we move the trend line out to the wick, as you can see here. So this is point 1, this is point 2, but then price comes up for the third touch. This is something we're going to get to shortly, is where it's not always, price doesn't always specifically touch the trend lines, and this is where so many people get caught out. So here we're watching for the third touch, but then we've broken above and it hasn't actually managed to sustain. We haven't been able to have a sell trade here. What has price done? This candle has broken what? It's broken above resistance. It's broken above this resistance. What resistance? The trend line resistance. It's broken above. So what do we expect when price breaks above resistance? To come back and test the support. Then we've tested the support here, and then we've seen a move down. We come back down, test the support again. But see how this level here, this is something we're going to talk about soon. When you combine trend lines and you combine support and resistance, you can make crazy trades in the market. Then you start combining it with candlesticks, which we've got to get to. But this is all just lesson 2. But you can see here where price is pushed down. See how price is here has retested this broken level of resistance of the trend line here, but it's also hit this level of support, and touched this. So knowing that, that's what will give you a great level to buy from, and then you can have a crazy trade all the way back up here, back up to this level of resistance that we had, and that's where you want to take profit. Not at resistance, like explained on lesson number 1, where you want to take some profit around the area, because everybody, other traders that know how to trade like this will be starting to take profit as we've reached those levels. So hopefully that doesn't get too confusing, guys, and you understand what I mean by that. Now let me just get back to our chart here. with the three types of trend lines. So here we've only got the long term, which we can see here. Because we've got the significant low on the daily and the weekly down here, and we've got 0.2 here, and then we also have the outer trend line, which is 0.1, 0.2, 0.3 here as well. Let's go to the 4-hour time frame. Sorry, that's a mistake. And you can see here 0.1, 0.2, 0.3. But now we've started to break through this. So we can see here price tried to break through. We then adjust this trend line to where? To the wick. And you can see here price did come back up here, tested this one more time, but now it's managing to break through. Because it's sustained below here, what can we expect to see with this next is the pullback, test as resistance, because why? This trend line is a level of support and resistance. We've just broken through support, so we can expect it to come back, tap that as resistance before potentially making a move back down lower. Now, why can we not get a inner, outer and long term on this? Because there isn't one. Basically, to show us there isn't one. We've got 0.1, 0.2 on, and we've got one trend line, and we've got the inner trend line. So we can only see two trend lines there. But of course, what did I say at the start? We do have the long term, because we've got the long term trend. So the outer trend is bullish. We can see we've got a move up. Then the inner trend is bullish. We can see we've got this trend line moving up. But then, of course, what we said at the start is we do have the outer, and this just shows that they won't always be like this. This is why I wanted to show you some different, a different version, is that not all outer, long-term outer and inner trend lines will all be in the same direction. So again, this is point to point, point to point, point to point. Now this long-term outer and inner are all in the same direction, but that's not how it will always be. And this gives us a good example. The outer trend line is actually in the opposite direction, because we can only get two from here. We can simply only find two lows. Significant low here, significant low here. And then when we try to come in tighter to find a significant low, we can only find a significant low here and a significant low here. It was here, but that price is now validated, pushed down lower. So we can only find two trend lines on the daily time frame or 4-hour time frame. So now on a weekly, we want to be looking for the the long-term trend line. And as you can see here, we come into a very important area for this pair in the future. Those who've been trading for a while will understand this a little bit more. But yeah, there's a very, very important area coming for GBP USD fairly soon. Because we're coming to an area where we've now got support, and we've got resistance. But of course, which resistance is stronger, guys? Theoretically, this is the outer trend line. This is the one that we found on the weekly time frame. So therefore, we can make that thicker, and we know that price is going to have a stronger reaction to that. Then the daily time frame, we drop down. We can see here that we've got these levels here. We've got this level resistance, and we've got this level of support. So if price was to come down, but just by drawing on this trend line, as you can see here, support, just by drawing on this trend line, we know that if price comes down, price starts moving down towards this area, we know, because we now understand about the trend lines, we know that if price comes down here and touches this trend line, that we can expect price to potentially push back up, because this is a level of support. So we can expect if price comes down to here to find the level of support. Now we're coming into an area where we're getting wedged in between this resistance, this support, so we'll probably have a bit of bouncing around here, but that's for something that we'll get to in the future when we start talking about patterns and triangle patterns in the future. Now it's something that we just touched on a minute ago, is about combining the trend lines with support and resistance. So support and resistance, as we saw from lesson 1, how powerful that can be just by understanding breaking above resistance, retesting the support, and being able to buy at support and sell at resistance, and how you can make money in a market like that. Now, what we're going to show you is trying to combine that with the trend line. So as I showed you before, we can quite simply put put this onto all of our charts, sync to all charts. So if I go back to my other chart over here, it's not on there now. If we go back to my other chart over here, we can quite clearly see my weekly resistance from my trend line here. It's also lined up perfectly with how price has reacted this week and rejected our daily resistance over here. If I just drop down to the daily chart here, we can see here that we've got 0.2 and 0.3. So this now shows us why price was actually pushing through my daily resistance. Price was pushing up a bit higher, hit this. Not only did it hit my daily resistance, but it found the weekly trend line resistance as well. So there's two forms of resistance here. So we know that when price gets to resistance, people start to sell off or people start to take profits, so price moves in the opposite way. Just like we've got support here, buyers come into the market, price hits resistance, sellers come into the market, start pushing it down. Well, imagine now when we can see that price is now reached a level where there's a strong resistance. Why is there strong resistance? Because there's two types of resistance. There's two forms of resistance here. And if you do not know this, because you do not know about trend lines, or you do not know how to put on your support and resistance from top-down analysis, you would never know. You would never know that there's this strong resistance around this area because you don't know how to draw it on. You're just not aware. So you could be in the market and you could be buying at a time where there's a huge amount of resistance against you and pushing price down. And you can see here, price, since it hit this level, has pushed back down nearly 100 pips. So let's just go back to put our charts on. You can see now this is combining resistance of the trend line resistance and combining it with the resistance here, this daily resistance. You can see here 1.33750. So buying here, if we bought here following lesson 1 and we made 100 pips as we pushed up here, we know we would have already had drawn on in a normal day. We would have had our trend lines drawn on. So we would have known that this trend line was sitting above here. But what else could have helped us take this trade? This is something that a lot of people don't use. And again, note this down. Now, what else could have helped us take this trade when price was here at the end of lesson 1? Well, the answer is, when price had broken above this resistance and held a support, I mentioned earlier that price is like a magnet to these trend lines, trend line resistance, trend line support. Price is like a magnet. When price was here, price is almost compelled to come up and tap these levels of trend line resistance and support before moving in the opposite direction. So when you are this close, it's almost a given that price will come up and take out this level. So if I just go back to, I'm going to have to delete this, or will I? No, I'll leave it on for a minute. Just get rid of these. Let's make it a bit more clearer. When price was right, so this is the weekly trend line. You see, we've got 0.2 here. That's what made the trend line for us. When price was trading down here, when you have this empty space where price was trading down here and the trend line, 90% of the time, price will come up and fill this gap. Maybe 95% of the time. With a high probability that price, especially because it's in an uptrend, so price is coming back towards to touch this trend. So price will very rarely come near that trend line and move away. If you have wick to wick, price is in a uptrend here, high, high, low, high, high, low, high, low, high, low. It needs resistance to make it turn. So it's already in an uptrend. It needs to come up and fulfill this trend line resistance, where it knows that everybody can see that this trend line is here, and the resistance is going to step into the market in two ways. People who have bought are going to take profit, therefore the market's going to pull back. And also because potentially people like us who are not in the market are going to be looking at taking a sell trade here. So that means that the market's going to push down. And why are we looking for a sell trade here? Because we understand, as good traders who understand top-down analysis and trend lines being support and resistance, we know that there's a strong amount of resistance being held here. That means we can take a short trade here, put our stop loss above, and we can make very nice profits from that move. So that is an example of combining both support and resistance and trend line support and resistance. I'm just going to give one more example here, guys. So we can see here trend line moving up, moving down, moving up, moving down, moving up, moving down. Now we have a trend line. I go from point 1 and point 2. We've got point 1 here, we've got point 2 here. We've got point 3, the golden, sorry, let me go back. The golden, I keep saying the golden point 3 because 3 is the magic number in trading, guys. I'm going to explain much more about that in the future. But 3, when it comes to trading, is a golden number. So, but here we come to touch the trend line support. Point 1, point 2. We've drawn on this trend line because we've got the 2 points. I keep reiterating this, guys, because I really want it to set in. So we've got 2 points here. We've drawn on the trend line. You can extend that into the future. Price is now coming back. So we know that there's a high probability that price will get to here and then it'll push up higher. Now, what way could we potentially put the favor or put the probability into our favor even more? I said in lesson 1, mentioned in this lesson, that trading is about probability. What we as traders are trying to do is put the odds in our favor, so that we have a higher chance of things playing out as we expect. Because what we are basically trying to do is predict the future. But no one can predict the future. That's why risk management is so important in trading, because we never know what's going to happen next. But we can predict what's going to happen in the future using past price action and past analysis to give us a good idea of what's going to happen. But what we want to do is stack the odds in our on our side. So the more confluences and more of the odds that we can put in our favor, the more chance there is of us winning a trade, compared to just taking a trade randomly and pressing buy and sell, where the odds are 50-50. It's like being in a casino and having red and black. If you press buy and sell on the market at any point, you could win, you could lose. But by doing technical analysis, you're putting the odds in your favor, because you know that this is how the market works. So here we know that we got a better than a 50-50 chance with price coming to hit a trend line, point 1, point 2, point 3. We understand that there's a good chance that the market's going to react to point 3 and move up higher. But what else could we do here just from lesson 1 and lesson 2 to stack it into our favor? We can combine trend line support and resistance with normal support and resistance. And what do I mean by that? If I just take out the horizontal line, we got resistance here. Resistance, price is pushed up, come back down, acted as support. Pushed back up, made resistance. Well, this is resistance. Price came back down, retested the price support. So resistance, come back down, support. broke through resistance, made new resistance. So what's it going to do? Come back down and test the prior support. Then we come back up, break through resistance. What's it going to do? Come back down and test the prior support. If we can combine that retest of prior support with the third touch of the trend line, that is where magic can happen, guys. That is where we can see a big move up to the upside. That's where we can look at buying the market, having a stop loss, a swing trade, or whatever it may be, and seeing this thing take off and having a nice move up to the upside. Take some profit, let it come back down. Maybe there's a new entry and we can keep going, keep going. But it's about combining everything into your favor to give you the best possibility of winning a trade. And here, if you combine this support and resistance along with support and resistance of the trend line, there's a higher probability of you winning. There's also more tools which we're going to show you in the next coming videos. A lot of you will know, I'll just throw it out there quickly, a lot of you will know about Fibonacci retracements and using that and combining to give you the higher percentage of winning. So what we want to be doing, guys, with our trading is combining support and resistance with our trend line touches. If we can get the third touch of the trend line or the fourth touch of a trend line to combine with a prior daily, monthly or weekly, sorry, that's a mistake there, guys, a daily, monthly or weekly levels like this, then we know there's a high chance of probability of winning a trade. So for instance here, we knew that price on a weekly was coming up to touch this trend line for the third time, 0.2, 0.3. We drop down to the daily time frame. We can see that price is hitting a daily resistance here. We've got our top-down analysis, so we know that we can take a short trade here. We can sell the market, and what's happened? Price has moved down 100 or was a bit more than that. Price has moved down over 100 pips in a couple of days, and you can make great profits by combining the two, support resistance along with trend line support and resistance. One thing on this video to explain about trend lines to give you a better understanding, but as you guys can see that there's quite a lot surrounding trend lines. I personally use them a lot. They're very good, and if you understand how to use them and are able to trade them, you can make a lot of money in the market. But there's a lot about trend lines that you need to know. But as a lesson 2, the other parts aren't needed too much yet. There's a lot of psychology about trend lines. There's a lot of manipulation in the market. But again, we are building from foundations and building from the ground up here. So we don't want to throw too many things out there and really confuse you if you are learning from a day one basis. So this is what you need to know, and this is what you need to understand. But I'm going to just throw in one more thing here, just to basically start us off before we get into lesson number 3. Now, lesson number 3 is going to have market structure, which is so important. A really important, very important lesson. I've actually taught this before, and this trend line I've explained to people before, and it was an eye-opener to so many people. But the market structure along with trend line is very important. So the lesson 3 is going to be a very important lesson to watch. Now, just to kind of touch on it slightly, but also what we're talking about today with trend lines is, guys, many people, and I understand that a lot of people watching this will already have been trading for quite some time, and sort of have in your mind that when you have a trend line like this, actually let me just get rid of that. When you have a trend line like this, many people believe that once you break this level, so this is price trending, 0.1, 0.2, 0.3, but many people believe once you break this trend line that the trend is broken. A lot of people obviously want to trade the right direction, they want to trade the trend, but they believe that once the trend line is broken, that the trend is broken. That once you've broken this trend line here, they believe that the trend is broken. That is false, guys, and that is how so many people get caught out at this point. There's another name that I have for trend lines, and it's actually called trap lines. Yes, trap, because it is a trap. Now, as I just touched on manipulation, it's too early in lesson 2 to go into that just yet, but it will be coming up quite shortly. But the trend lines are major trap lines, and it's where so many people get caught out in the market. The trend line strategies are one of the most known strategies that people use. Everybody more or less uses trend lines, so therefore at these levels there's huge confusion as to what's going to happen. We can often find you sometimes have just a spike and an instant reaction, but there's also a lot of consolidation around these areas. And this is a major area of confusion in the market, and this is something that I'm going to be going into in the next video. Just because you've broken a trend line does not mean you've broken a trend. I'm going to leave it there with that, and that's where we're going to pick up in the next video. But we're going to understand market structure, and we're going to understand why breaking a trend line is not necessarily breaking a trend. And just because you've broken through here, there is a high possibility of this continuing back up, like we've seen in a couple of examples. And then what that means is that price just needs to adjust to here, and we just have a new second point. Let's just say from here, we just have a new second point now instead of here, and then price can come back and can touch this for a third time and then move back up again as well. But just because you've broken a trend line does not mean you've broken a trend. That's why I don't really like to use trend line too much. It's a trend line support, but it's also it is just a support of resistance. Just because you broke that level, as I showed you here, so many people, what happens in the market, guys, you may not understand this if you're brand new, but we'll get to that in the future lessons. But if you've been trading for a few days, a few weeks, or a few months, you might have come across videos, you understand about trend lines. Many people, when they see price break a trend line, they'll take a short trade, and then they don't understand why price is then quite shortly after taking them out, they've lost a trade in the market and price has gone the other way. That's what we're going to be getting to in the future. But I just want to recap. As I said, this video has got quite lengthy. I like to go into detail, and there will be more. It's almost like a part 2 of the trend line, which will be going into the next video with lesson number 3, but we'll also be covering market structure as well. But as I said, what we want to do is cover the basics and really just build you up from the foundation level. And even if you've been trading for years before, by watching this stuff again, it really just triggers your mind and just has that light bulb moment where you think, I missed that. I was missing out the simplicity of how to use these trend lines and how to use the support and resistance. So we'll be talking about the break of a trend in the next video. We're talking about the trap lines and a little bit about the manipulation around that, the consolidation and the psychology that comes around trend lines and market structure. So we're going to be delving into that in a little bit more in lesson number 3. But today we can see what exactly what the trend lines are. We've covered what a trend line is. We understand that it is a support and a resistance line. It is also showing us the direction of the market. We understand that you need 2 points. Any 2 points create a trend line, which then ascends into the future to create a new support or resistance. And we understand as a review that the higher time frame is the stronger time frame in all cases. So whether it's support and resistance, normal support and resistance, or with a trend line, the higher the time frame, the stronger the trend line is. So if it's on a weekly time frame, that trend line is going to be stronger than a 1 hour time frame. We've gone over the basics, and I've given you as much as possible in this video without making it too long. and I've only really shown the weekly, daily and 4-hour, but we will be delving deeper into trend lines on the next lesson. But as when you're learning, you can't overload too much. You just need to take this and digest it in, and then we're going to get into even more juicier parts of the trend lines and understanding how to work on the lower time frames in the next episode. But the next episode is very much about market structure, and that is where watching trend lines and market structure on the lower time frame is going to be very, very important. So I'm looking forward for you guys to see that one as well. Guys, as always, please drop a comment, like this video, subscribe to the channel, let us know what you think. And yeah, we've got loads of stuff coming for you in the future. We've got, as I said, lesson number 3, market structure and more on trend lines. We've got everything coming for you guys, candlesticks. We're going to be talking about patterns, strategies, manipulation, psychology, so much more coming from us, guys. We have literally, this is just the tip of the iceberg, just to really give everybody that good ground game that we can build from and learn before we start moving on to the more advanced stuff. So hope you like this, guys. Speak to you soon, and looking forward to lesson number 3. Thank you.